Well, here we go, a mega week in the stock market. Let's have a look at some of the stuff that's going on this week. There's a lot of stocks that I own that report earnings, and I'm sure there's a few stocks that you own that report earnings as well. Now, we actually have had one already, which is Inmode. They actually have already brought their preliminary earnings out, and then yesterday they actually brought their full earnings out. Now, the crazy thing is, if you ever look at the preliminary earnings, they were unbelievable. The EPS was a massive beat, the revenue was an absolute beat, and on the day that stock actually went down 7%, and then yesterday they brought their full earnings out, and once again the EPS once again beat again, and the revenue once again beat again. So overall the revenue ended up beating like something like 10%, and the EPS as well was unbelievable beat. I think the EPS was a beat by like 15% or something overall, and yeah, once again Inmode absolutely putting fantastic numbers in. And what was the stock rewarded with? Well, actually on the day when it brought the earnings out, the stock was actually down. In pre-market it was down something like 2 or 3%. By the time it opened up, it tried putting the rally in, as you can see, and then it declined once again, and then we went on a bit of rally at the end of the day when a lot of stocks did, and the kind of indexes rotated back into the green. That led Inmode to go back into the green as well. So overall, yeah, I would say Inmode, when you combine the 2 days of earnings that it brought out, preliminary and the actual earnings, it was down 5%, and that was kind of crazy to look at a company like Inmode that brought out unbelievable numbers, and let's not forget he's trading at a crazy cheap valuation, 13 times earnings for a company that has just absolutely smashed numbers, that's going to grow profit, maybe not this year because it's got to start paying tax again this year, but going forward it will still grow profit at 10-20%, revenue growth at 20% revenue growth, and it's not an expensive valuation at 13 times earnings. Should be a lot higher than this, and yeah, it's rewarded with a dip in the share price, or at the end of the day, on a really good day for the stock market, only up 2%. So if that's what we have to go off with earnings in the next kind of week, then it's going to be worrying, because if Inmode bring these numbers out and it's not rewarded on the share price, it could be I don't want to be in the company that misses earnings, put it that way, because that's going to get absolutely tanked. So yeah, fantastic numbers by Inmode, and once again not rewarded. The negativity still affecting companies like Inmode at the moment, unfortunately. Now we'll take a look at some US stocks in a minute, but a shout out to two UK companies that I own. First of all, Boohoo. Obviously a lot of you guys will know about this one. This is going to be doing a bit of a preliminary earnings this week, in fact tomorrow, so I think we'll probably end up making a video on this one. I feel like recently it has been flatlining a little bit down here, so I think everyone's kind of now in the last 2 months been preparing for this update, and a bit of an update on how the revenue growth is going in terms of the UK side of it. Is that still going to be growing at good rates? Have they improved their EU growth, and have they improved their US growth as well? So that those are going to be what everyone's going to be looking at. Is that starting to move in the right direction, and is the UK still doing well? The next thing will be the profitability. Obviously looking at ASOS, they obviously went negative on that point of view on their update. So everybody's going to be looking at Boohoo. At the moment, Boohoo's got priced in that it's going to be pretty ugly on that side. So we'll see if there's surprises, but yeah, that'll be key to see how much the logistic issues are affecting them, and the return rates and everything like that. So yeah, I generally don't know what to expect from Boohoo. I can't really give you much expectations. Obviously we know the profit's going to get hit. It's how much is it going to get hit by, and how much is it really going to put in that revenue side of it. So yeah, I'd like to give you numbers on this one, but it's a very unknown one. But I would say down at 80p, there's a lot of negativity priced in on this stock at the moment, so it would really need to be, in my opinion, awful numbers to tank. We'll see what happens though, and maybe I spoke too soon on that one. And Card Factory, so this will be very interesting because obviously this is the first time they're being opened up. They've gone through the Christmas period. There was some positive news the other day which actually saw the share price jump a really good amount, as you can see here, 43% within the last month. That came on news of refinancing, which is obviously really good. Obviously paying less debt to pay down, not needing to raise more capital. And the suggestion would be, if they're allowed to get a better rate, that would suggest that someone's whoever's looked at the refinancing gone, all right, you've gone back to putting in good numbers, you're back to profitability, we're willing to refinance you at this certain rate. So I would expect something strong from Card Factory. We'll see what happens, but that'll be interesting to finally get some good numbers out of this stock. But yeah, I'm still surprised this one in particular is not above £1 yet. I thought this would be above £1. But yeah, we'll get on to some of the earnings this week. So not really anything on Monday apart from Inmode that I was kind of looking out for, which actually didn't even still make the list on here, which is unbelievable. Still not a very well-known company, as you can tell. On the Tuesday, Pfizer, BP, not companies that I own, but I know a few people play them as dividend stocks. AMD, I know a few guys are in AMD. Airbnb is one that I love to check out. So if I'm a fan of the company, I would like to own the stock. The valuation is just still nuts to me right now. One of the stocks that seems to not been hit that hard with a lot of the growth stock sell-off, and has held up its valuation, which is crazy. So yeah, Starbucks, one that's interesting to me once again. Would love to own this as a bit of a value play, a bit of a dividend play. Needs to drop a little bit more, so I will be checking that one out and see what happens there. Skyworks Solutions and Lyft and Match Group, there's some interesting ones there as well. Now when we get onto the Wednesday, this does start to get a little bit busier. Obviously we've got the likes of Uber, Etsy. Etsy is very interesting. Etsy is not too far off where I'd actually consider starting a position now. And we also have Skills. So Skills will be doing their first trading update or their first earnings since they said they were going to change the business model slightly and not focus on advertising as much, cutting costs, getting towards profitability. And yeah, that's going to be interesting. At the moment, it's very much priced down. I know Skills deserves to have a bit of a hit because management did mess up slightly in the last 2 quarters. They should have been reducing that the advertising costs a lot more than what they did, and now they've got to pay for it with tough comps and everything like that. So it's been hit awful as a stock. I don't think it deserves to be $2 for sure, but it deserves to be down. And obviously with a growth stock sell-off and anything high risk, which Skills is high risk because it loses money unfortunately, it's going to get absolutely killed. I don't think it deserves to be down at $2 saying that, but yeah, it's it'll be interesting to see what happens now that business kind of moved on from that kind of big advertising ramp up. So looking at the numbers that are forecast, I've got to say the average EPS is around 0.18 and the sales growth is 15%. I actually think these numbers are very optimistic. I will see if they can do 0.18. We'll see what happens there. I would think it would be a bit lower than that personally. We'll see though. And their sales growth is 15%, which I can't see them doing 15% because you've got hard comps, you've got your overlapping hard comps with new lockdown and new variant, and also if they are reducing the sales marketing budget to get 15% growth on hard comps. You've got to remember Skills hasn't done hard comps yet. The year where it should have done hard comps, which is 2021, it was still putting a lot into the marketing. So where a lot of companies are starting to go through the hard comps, if you look at likes in the gaming category of like Corsair for example, they've gone through, they've nearly come out the other side of their hard comps now. Skills hasn't done that. So yeah, I think these numbers are really optimistic, to be fair. So I don't know what's going to happen with Skills stock, because I do think it's I think it should be a lot higher than what it is right now, even with the negativity that's going on and the change in business model. But if these are what analysts are expecting, I mean, I don't know if they can hit it. We'll see what happens, but yeah, we'll see from that point of view. And then we'll go on to Thursday. So we've got Shopify reporting earnings. Love Shopify. I'm trying to build up a lovely position in this one at the moment. So we'll see if this has a drop off their earnings, because obviously Amazon, another e-commerce play, had a bit of a drop off earnings. So we'll see if that translates into Shopify. Could create a bit of a buying opportunity. We'll keep an eye on that one. We have Block as well, which I'll keep an eye on as well and see how that's doing. Would not mind buying a bit of this one as well potentially. And then we've got Penn National. Datadog I like Datadog, still a little bit too expensive for me, but a company that's interesting. Like I said, Square after the hours, probably did that in the wrong order. Should have done that after Shopify and Datadog. But then we've got Fubo. Few guys I think are interested in Fubo. Lucid, Cloudflare, Opendoor, Mercado Libre. That's a great company that I'd love to own. I don't know, I just can't get over the valuation at the moment, I think, on that one. Wish, which I think is an absolute terrible company. DoorDash, Virgin Galactic, and on Friday, not too many big ones apart from this guy, the DK, the King. The King is reporting on Friday. So yeah, at $15, people have asked me my opinions on this one. I think, unfortunately, I think the we'll have a repeat of Q4. I expect the numbers to be very strong. However, I expect the stock to go down on earnings, and just that's what it is at the moment. That's what it is. No one likes high risk plays, and I can see a company like DraftKings reporting earnings, and it's just totally not well received. So yeah, that's my thoughts on DraftKings. I think it will put good numbers in, but I expect the stock to go down, unfortunately. If we have a look at expectations, the average estimate is 1.16, and then on the sales growth it's 32%. So I think that could potentially be okay. It's hard to say with like the New York spend potentially. That could be okay, but yeah, it's hard to predict the New York spend. Obviously because New York came online in Q1. The average estimate is 414 million with 32% sales growth. I think they can beat that. I would like to see it a little bit higher than that. So yeah, I think that could be a beatable number from that point of view. But just to shout out on DraftKings, it actually had a really good day yesterday. So what has happened recently is Tilman Ferreira came out and basically said that the GNOG merger is still on track, which is great. He's still very bullish on DraftKings, and on an interview with CNBC, he said this down here, which he said, you got to remember it's a tech company and it's going to be, in a few years, will be like Amazon or Tesla or one of the other tech stocks, and it'll be $50 to $100. He said when they turn the corner, like all tech companies become profitable, they will become really profitable. I saw that for myself running GNOG. So yeah, I think Tilman here is totally spot on. I think that in the next few years, it will 100% go back to, $50, $100. Yeah, you got to remember it is a tech company. Yeah, like I agree. I don't think it'll be on the lines of Amazon and Tesla, but it will be a major player in the next few years, 100%. And like he said there, it will turn the corner and become profitable, and it will do very good profitability when it comes to it, as we've seen with the states that are already profitable. And I think with Tilman as well, that's having him on the board as well, such an experienced guy in this area as well, is going to be massive for the company. And that's why, he wants really the merger to go through. He wants to own, he knows that DraftKings is going to be the biggest player in this area in the next few years, and he wants to be part of it. With GNOG, he can do it potentially, but not on the scale of what DraftKings can, so he might as well be part of the DraftKings story. And then yesterday we went on a bit of a rally because it looks like the Golden Nugget acquisition is set to close, and we can see here they actually filed a form for the Nasdaq, which says the intention is for the last trading date to be on the 4th of May, which is actually tomorrow. So we'll see if that happens and the merger does go through and DraftKings acquires GNOG. That'd be absolutely unbelievable if they do. And another little shout out is that DraftKings was actually mentioned on Morgan Stanley's issue of 45 highest conviction stock picks as well, so I think that also helps. But yeah, if they get the GNOG acquisition, that'll be great, because obviously with DraftKings that will help their casino side of the business as well, which is probably one of the weaker sides, so that'd be great. Obviously you get Tilman on board, you get the GNOG side of it, and also that is probably the more profitable side of the business as well, because there's better margins on there. And the thing as well is the partnership that is agreed is not just to have GNOG, but actually to advertise through a lot of the GNOG locations, which then you get really good amounts of advertising. So this is a major step up. This is a really, really good acquisition by DraftKings that will benefit them massively in the next few years. So yeah, great move. And the thing as well is that what we'll probably see here is that you can see the average estimate is they do 1.9 billion. In my opinion, we expect 2.1 to 2.3 billion this year in revenue from DraftKings. If the GNOG acquisition closes, then that could be a lot higher from here. So we'll see what happens there. And also be interesting to see if we get a guidance update with the New York launch after the earnings as well. So yeah, I'm really looking forward to the DraftKings earnings. I always look forward to them. It's a company that I'm massively bullish on. So when it comes to hearing about how everything's going on, yeah, I just count down the minutes until the conference call starts for DraftKings. So yeah, one to keep an eye on, and it's once again smashing it. It's going to be, can't be too long until the share price is rewarded with how well this company's doing. So yeah, that's all the things to keep an eye out for, and what I'll be keeping an eye out for. I'm sure I'll be making a video on one or two of these companies in the next coming few days anyway. So I hope you enjoyed it anyway, guys. Hit the like button, subscribe. I'll see you in a bit.